All right, guys, welcome back to another episode of The Deep End, big number 33, here with my main man, Mr. Gutman. I'll pass the floor over to you in just a sec, but I want to set the stage a little bit here. Ari is in the States right now, and he was just telling me he has some he's in Boston, he's about to go to New York, and he was just telling me about some really cool plans that he has to check out Wall Street. So I'm going to kick it over to you, man. Tell the people what you were telling me. It sounds
So
like a really fun experience.
as it always goes, Ryan and I jump on, and we always say we're gonna just go right into the recording, but we never do. We always talk for a few minutes, and then at some point we always say, "Okay, we should record this because this is the good stuff." Anyways, I just started telling Ryan about, I'm in Boston right now, and I'm gonna make my way towards New York City, just over the weekend. And there's a guy on Wall Street that if you look him up on Google, his name's Paul Tuchman, but if you look him up, just the crazy Wall Street guy or the crazy New York Stock Exchange guy, he's got the white hair. I reached out to him because I want to walk the stock exchange with him and, get a cool picture and just check out what's going on in the scene. But I'm going to be going to the New York Stock Exchange. I'm going to be hitting the NASDAQ, and, seeing clients and whatnot in New York. But at the end of the day, I'm making a fun trip out of it. So, by the way, if anybody's in New York, I'd be more than happy to meet up and to check out the scene there with everybody. So just let me know in the comments, or you could reach out to me directly. But I'm having a fun time here in the States. And then actually, I'm going to Philly for a buddy's wedding. From Philly, I'm going to Mykonos. So I'm going to head right back out of the U.S. But I think I'll be back next coming months because the Blossom Tour, which for anybody who was on with us the other week, we had Brandon on, and Brandon's the CMO of Blossom, and he was talking about the tour quite a bit. Ryan, I'm still trying to figure out whether or not I can go and whether or not, they want me to speak, but whether or not I can be there. And I got to say,
For
man, I really want to go.
for which one
All of
or
them.
ones are you all of them or just the US ones?
Just the U.S. Yeah. Sorry.
Okay.
That was, yeah, when I say all,
Okay.
just the U.S. So what do we got? We got New York, we got Chicago, and we got L.A. And I'd love to do them all. And if I
Man.
can, I definitely will. But I love, man, like I was in Albania and
Yeah,
I
I
was
want to
just
hear all
meeting people.
about this.
It was nuts. For anybody who hasn't been to Albania, put Albania on your list. It's like a hidden gem of Europe. And it's right next to Greece. So what you kind of get is, and I did hiking, man. I rented two wheels and I went around on my two wheels. I went to the Blue Eye, which is a hot springs that you can jump into, and just so
Mm.
many cool things. But what I was really doing a lot of is just talking to a lot of people. I love meeting people. I love meeting people and talking. And I did Masters of the Market from Albania. I did the other podcast from Albania, the episode last week. And man, it's just cool. I know traveling's not like on your biggest to do, but I was thinking about you the whole time, dude.
Oh, well,
I was like, Ryan's
that's
gonna
really nice,
travel.
man. It sounds just from what I saw from what you were posting on Instagram and whatever, it looked really cool. It looked like a really like relaxing place. I like the fact that you can get around on a little moped. You were enjoying your lunch, your Mediterranean lunch there, just outside in the sun. Having some espressos here and there, I think, and it did look like a really cool experience. I would totally be open to something like that. Where here's where okay, here's where it's a little bit too out there for me. And forgive me for saying this, anyone and everyone. I just don't know that I feel the need to go to like Japan. I don't know that I need to go to South Korea. I don't know that I need to necessarily do that. I would not mind doing like the Mediterranean thing. I think Greece would be fun. Albania seems kind of similar. Is it on the Mediterranean, by the way? Is it? Are you still getting
It,
that
it,
there? Or?
it's the Balkans,
Well,
the
okay.
Balkan Sea. But dude, like you can. So I was in the south. I want to go back to Albania, and do the north. The north is more like hiking, like in the Albanian Alps. The
Mm.
south is more. Well, it's literally like Greece. You can see some of the Greek islands, and you can enter Greece through Albania. So the south of Albania is stunning. Like you get these as you saw, like anyone who wants to check out what Ryan's talking about, I posted everything in my Instagram. But you could see like the cliffside, and then you're just driving on the water, man. It's a comparable is Highway 101 in California. Only I gotta
Okay.
say, like that's the best America's got to offer in terms of like beautiful cliffside scenery. This is a different level. Like this
Hmm.
is different level, and so yeah, I'm excited. I'm going to Santorini, not Santorini, Mykonos. I've been to Santorini. This was reminiscent of that, but I'm going to Mykonos come August 31st. So I'm excited for that too, and you'll probably see more espressos and
Look,
more relaxation. But you know where this all stems from, man?
what?
It really all stems from the ability to just start enjoying the fruits of all my labor, which is like what we keep going back to. Like, man, once you hit a certain number and you run the compound calculators, like you, at least for me, I just realized like I'm okay, dude. Like, yeah, like I could take these nice little vacations now and like know I'm gonna be okay.
So I know I'm glad that you bring this up. So I know that before you went on this trip, the seeds of that idea had, they were kind of planted there. Do you feel that that's more reinforced after actually being in Albania and being able to be on vacation a bit? Do you feel a bit more strongly about all of that after actually going through
Oh
it?
yeah. I
Yeah.
mean, look, I like we said, like I was already sharing that. Like I feel more comfortable with going, and I just work hard, play hard, and that for me is has always been true, but now more than ever. I used to like play a little bit, like work really hard and then play a little bit, and now it's like no, just it's work hard, play. Like, dude, you did it, you did the heavy lifting,
Yeah.
and so no matter what it is, even on Blossom, man. Which, by the way, everybody, this podcast is powered up by Blossom. So if you're not on Blossom, jump on there. You get to see a lot of my crazy posts and Ryan's quality posts
I
about
like
things
what you've
going
been
on.
doing. I've been meaning to tell you this. I like what you've been doing lately, man. You've been posting things that I think it's pretty akin to some of the stuff we talk on here. It's pretty motivational. It can be pretty rah, but I just think, okay, and what you're posting on Blossom is not directly about investing, but it certainly applies to investing. Like you just put out something I think today, a few hours ago, that said something along the lines of, you can't, you don't wake up, or how do I say it? You can't teach someone to be hungry. They just wake up and are hungry, or something along those lines, right? I'm butchering it, so I'm sorry, but
No, no,
what
you
even
you
was
hit the
that?
nail on the head, man. It was you
Okay.
can't teach ambition. You're either hungry or you're not. And I love it. Someone commented on it. It was like the first comment. They were like, "This is stupid," and I was like, thanks for your feedback, but look, the reality is, one, I'm just having fun, so I don't care what anybody says, right? The other thing is, it's really not that stupid if you think about it. The way I kind of think about it is everybody is talking about their portfolios on Blossom, which is awesome, and it could be inspiring, and it's motivational. But I think sometimes when you're in the midst of scrolling and you just stop and read something so simple like what I posted today, and it's like you just can't teach ambition. You just are. It helps someone almost just reset, you know? And I think that's really what's needed, man. I just think like we're not robots. We need to program ironically, we need to like reprogram our brains. And when in that reprogramming, it's like this belief that you can and you will. You can and you will. And I don't see enough of that, I feel like, on any platform. And, even with the direction of my Instagram channel, which I've been talking to you forever about, now I'm finally executing on. To me, investing and finance is so much more than just dollar signs and cents, right? It's like, it really is a mindset. If you don't believe that you are going to be a millionaire, then you're not going to be a millionaire. If you don't believe that you're going to be wealthy one day, then you won't. And so mind, body, spirit, like I want to keep my body healthy. I want to program my mind so I'm at peace, whether or not I hit millions of dollars or I'm exactly where I'm at today. I just pre-recorded the next Masters of the Market, not the one that will go out this upcoming Monday, but the following. Dude, this guy went from broke to just about millionaire within 10 years. Like, when I say broke,
Dang.
no lights in his house, like eating ramen soup, noodle soup, like broke.
That's crazy.
And I just loved what he had to say. Like, I just aligned with him. He was like, it's your mindset. It's your
Hmm.
mindset. You need to understand that, like, you can. And I just
Yeah.
get that, and I was sitting even in Albania, Ryan, and like I was just like, this is all possible. Like, I've never felt more confident in my life than right now, and sharing that it's all gonna happen.
Well, that makes me happy to hear for you, man. And I'm glad to hear that you're taking some time to do this and maybe get that reset that you were talking about and gain a fresh perspective and be able to, I don't know, maybe clarify your thoughts a bit. It's hard to do that when you're always in the routine, which is nice too, right? I think we're both pretty routine guys, but there is something about stepping out of that routine, even if just for a few days, that you need every once in a while. If for no other reason, just to remind you why you like being in that routine. But it does give you a fresh perspective, and it does kind of help you lift your head up and see what's out there versus just keeping your head down, focused on whatever it is you're trying to do.
For sure, man. That environmental, change. Because I kept don't get me wrong, it's like my vacations are still waking up at a freakish 4:45 and going for a run. It's just
Yeah.
going for a run on the mountain, the cliffs of a mountain, and like seeing the water. And
But
I
dude,
was
what's
like, why
better?
don't I live here?
What's better than that? That's on and honestly too, that is the cool thing about running is you can do it anywhere. Or you just step outside your front door and you can go do it. But it's such a great way to I guess sightsee, right? These new places. It's such a cool way to do that. And what you're describing right there sounds like heaven. Like I'd travel for stuff like that. Yeah,
I,
that's
I'm
cool.
I'm serious, Ryan, man. I thought about you a lot because as I was out there, I was like, man, how does Ryan not love traveling? Like, it's just like I was like, he's got to get out here, like he's got to see this. And I think so many people do, man. I think a lot of people, are scared to spend that money, and I'm gonna be the first one to say, don't spend it if you don't have it.
Yeah, yeah.
I again, the fruits of my labor. Like I've just worked really, really hard to put myself now in a position where, like, I don't have to worry about these things. And I was still working every day that I was over there, so it's not like I went on total vacation mode, which is a whole nother thing. But Ryan, also what happened while I was over there, which was just like, it was so epic, man. My portfolio hit a new record high.
Oh, okay.
It's since dropped down because of everything that happened. Even like just today with Sam Altman coming out with the news that there's a tech bubble,
Oh,
and
really?
tech
I
sold
actually didn't
off
see
today.
that.
You didn't see that?
No.
I think he tweeted it, or he said he made a statement that, like, tech is basically in a bubble, and that's why we had a tech sell off today. But
Okay.
my portfolio, man, hit $331,000 while I was in Albania, and I was just sitting there like a freaking Albanian king, man. I was like,
So
I don't even.
I think
Albania doesn't
last
have a
week,
king, but if there was one, I was that guy.
yeah, so I think, well, not last week, but I think 2 weeks ago you were maybe at 313 or 318 or something like that.
Yeah.
So, man, it just keeps on keeping on. Mine's at an all-time high too. I'm at about 1085 right now. So, it's starting to get up there too, which is awesome, right? It's a cool feeling to keep hitting these new peaks, but and let me know what you think of this too. Whenever this happens, and I know we've talked about this before, whenever this happens, I start to get a little bit paranoid that something like it's going to start heading the other way. It's bound, okay, because now we're at an all-time high and it seems like it's just been nothing but up. Yeah, something's got to give. We got to see some sort of pullback here. I can't help, whenever this happens, I can't help but feel like the opposite's coming right around the corner. Do you know what I mean?
Oh, for sure. I look, for me, that happened today because as much as I was celebrating, the new record high, our buddy Sam comes out with that news, and I'll just read this now on screen where I'm at. Take a guess at
Okay.
where I'm at after this tech bubble news.
Okay, so you were at 331. That was the peak. I'm gonna guess, man, 316.
Wow, you're pretty close, man.
Okay,
311.
cool. Oh,
311,
ouch, dude.
918 as of like
Well,
right now, this moment.
okay, so dang,
Like, but you know
that's
what?
kind of gut wrenching.
It it would be if I wasn't used to this. And
That's
so
true.
I saw my portfolio just come crashing down today. And what did I do? I bought.
Mm.
And
Yeah.
I'm
Well,
like, I'm
What else are
so
you gonna
fired
do?
up. Yeah, right?
Yeah,
What else are you gonna do?
you're not gonna do the opposite. So yeah.
Just keep buying. No, I bought. So as everybody knows, I'm on this tech crunch now here of just scoring more and more of a tech oriented ETF, and I just, that's the future for me, man. Like I think I want to get my S&P 500 and this tech orientation ETF to both $100,000 each before I even think about buying more individual stocks. Unless I see a really good opportunity with an individual stock. Oh, I also sold out of waste management.
Oh, really? Dang.
Yep. Yep.
Just to put it more into the ETFs. Is that why?
No, man. You know what happened? The freaking conversation last week with Brandon.
Mm.
We talked about, and I even said it at the end of the podcast. It was like, what usually happens for me is I think about something, an idea enters my head, I talk about it, and then all of a sudden I do it. And, I'm looking at it and I'm like, well, why, if I do agree with Brandon's logic, with which I do, I got so much time back, man. I'm like, first of all, not doing all this research anymore, investing has allowed me to really kickstart Instagram because I've gotten a lot of time back. And that's just an amazing passion project that I have now. Like, how do I share mind, body, and spirit, right? Like, how do you really share that? Like, I want to do the in the life type of videos. Dude, I'm
Hmm.
financially free already, right? So to speak. Like, I
Yeah.
feel
Well,
financially free already.
yeah, and I would imagine a big part of that feeling is knowing that even if you didn't contribute another penny, like just knowing what it will grow into, which we've talked about before. So that's cool.
That's exactly what it comes down to. Like, I
Mm.
just, like, I don't know. I know my work ethic, so if I really need to go make more money, I can go make more money. But at the end of the day, it's like just knowing I can put all of my money into the S&P 500 and I'll come out with 11 mil by 65. That's crazy.
Yeah.
So I'm financially free as far as I'm concerned. Like, I'm good.
So with that said, with the removal of waste management, this still leaves maybe three individual companies in your portfolio. I think Alphabet's in there. I think maybe Microsoft and Tesla. Are those the only three?
Not Microsoft. No,
Not
I'm up at, so
Microsoft.
two ETFs.
Yeah.
And then I have six other positions in there.
Okay, so there's still a decent handful.
Yeah, yeah, but a
Yeah.
massive chunk is, of course, Alphabet,
Right.
Apple, and
Oh, okay.
the smaller slivers, I'll say, literally slivers, are Nvidia and Tesla, Amazon. Those are like the little slivers.
Okay. So it's
Right.
basically like you're basically rocking tech ETF, S&P, and then some of the Mag 7.
Yeah, and that tech ETF, man, is just freaking growing. Like, it's 35% of my portfolio at this point.
Okay. Well, nice, man. So So do you think you'll keep trimming positions from here? I mean, after last week's chat, or are you? I mean, you're probably just taking it one by one. But what do you think happens from here? Do you keep consolidating, or do you feel
Yeah.
content with the balance that you have between, um, the ETFs and the stocks? And the thing about the stocks now is that it's all pretty much in alignment with what you're talking about as far as your belief in tech. So, and obviously you already have exposure to them, to I think all of those companies. Yeah, definitely all of those companies through the two ETFs. So with that, Waste Management's a great company, but it almost did seem a little black sheepish compared to the rest of those individual stocks. You know what I mean?
100%. And I think another black sheep in there is UnitedHealth, although that one's staying.
Oh yeah, I
Did you
forgot
see
about
the
that.
news recently, man?
Um, I don't. I'm about Buffett, or are we talking
About
something
Buffett.
else?
Yep,
Yeah,
exactly.
yeah,
What do you think about
yeah.
that?
Well, I think great timing. I mean, we'll see if this ends up being the bottom for UNH, but yeah, good timing. Um, I think insurance is obviously right up Berkshire's wheelhouse, right up their alley. So I think it's a really fitting investment. Um, and I'd be interested to know like who actually made the decision to buy, because whenever this happens, whenever Berkshire makes any move, it's the headline is Buffett did this, Buffett did that, which for a long time that was the case, that was true. But I don't know, for at least a while now, that there's more hands in the there's more cooks in the kitchen, I should say. And so it may not have been him that made that decision. So yeah, I'd be interested to know what that was like behind closed doors and who made that final call. But yeah, I think, like I said, overall it's a pretty fitting investment. What I do think is funny whenever that happens is seeing how many people then start their position in United Health after Berkshire adds it. Then they'd finally decide to add United Health or whatever it is. And Russ actually put, I don't know if you saw Russ's video about this, but he put out a really good video basically saying, yeah, I get it. I get that Buffett is Buffett, but no matter who it is, don't you shouldn't buy something just because someone else is buying something. It doesn't matter who it is, because their circumstances are going to be different than yours. And it's funny because he got a lot of slack for that in the comments, just like people ripping him apart,
Really?
saying almost as if he was like defying Buffett by saying that. But I think what it is people who did make that decision to buy UNH after they saw Warren Buffett, quote unquote, bought UNH. I think that maybe saying what Russ said is maybe they received it as like an attack on their decision or something along those lines, or you know what I'm saying. And so I think that's where that came from. But in the video, Russ shared this Buffett quote. I think it was from like the 1987, 1988 shareholder letter. And Buffett said something to the extent of, it's funny because, people will always do that. They will always follow, my buys, whether or not that's true. Like there's always speculation, Berkshire bought this, Berkshire's buying that, or whatever. He said a lot of the times it's not even true. It's just noise. But he says, I never correct these people. And I don't want to tell them either way what's going on. If they want to try and, he says, if they want to try and follow Berkshire and do the things Berkshire's doing, I don't know why they don't just buy Berkshire stock. Like that's the easiest way to to follow along with what we're doing. Just if you want to do the things we're doing, just buy our stock. It's going to be way easier. Um, but he said people don't do that. There's something still about the excitement of maybe owning it yourself, and I don't know exactly what it is about that, but there's some reason that people would rather follow the trade versus just being a part of the company that's actually making those decisions. So it's interesting. It's just another example, I think, of how much psychology comes into this investing stuff. And like you said earlier, it's not just like dollars and cents. Um, and this is no surprise to anyone watching or listening either. But yeah, there's just so much human behavior and human emotion that goes into all of this stuff, and we see it play out in so many ways. And I think that's like one of the most interesting things about being in this space, is getting to see all of that, and also see how that comes to the surface for ourselves as well, because none of us are um, none of us are what's the word I'm looking for? We all fall victim to it too because we're all human beings. So it's interesting to see how that happens. And I'll end it there because I'm going to go on a tangent if I don't. More of a
Keep going,
tangent.
man. You just see where it goes.
But yeah, all of that's to say, dude, it's just yeah, it's interesting. I think it's a good buy, but it's also interesting to see the reactions from it.
Look, in my situation, because I bought it, I held it long before Berkshire, which I will say, by the way, it's spot on. It's interesting to read the headlines on it because, a decade ago it would say Buffett bought, and now it says Berkshire bought. So again, too many cooks in the kitchen. You're spot on, but I saw the news and I said, "Welcome to the frickin' show, boys."
Yeah.
I said I've been in this position, for months and months before you, and for me, seeing that news was just reassurance that I picked a great quality company, and I think it just goes to show that like the one question I did have was why UnitedHealth just weeks ago was at a much lower low. Why didn't they act then? And so it got me thinking, like, why at a certain time did they decide to go in on it? Like, what was the trigger now when a month ago, 2 months ago, it was lower? It was much lower, much cheaper. That was the one question I did have because I'm sure they had the same information, or this same at least inclination to buy it. So I'd be curious to know the why, like what was the trigger all of a sudden. But I was still nonetheless thrilled to see that at least the Berkshire team came through and bought it. Like I said, my first thought was welcome to the show.
Yeah.
And I felt good. It just helped me like kind of reaffirm that I made a good investment decision.
Yeah, I can see that. And I'm sure a lot of other investors feel vindicated too. Like it's if Warren Buffett's doing it, then it's probably a good decision. So yeah, I totally get that. And as far as the timing of the purchase, that's an interesting thought, and that's something that we'll never know why they bought at the exact time that they did. But although with that said too, when the what's the form called? The eight what's it an eight what's it called? Do you know what I'm talking about? That lists all their trades. Why am I drawing
Oh,
a blank
the
on it?
the hedge fund. Yeah, I know what you're talking about. The now it's got me,
It's
man.
a number and a letter. It's
Yeah.
Russ.
And
If Russ was here,
we
he'd
mention it all the
know.
time, by the way.
If we were live right now, people would have it for us in the chat. But anyway, I think you're looking it up. Whatever that form is, we have to keep in
8K?
mind too. We have to keep in mind that that comes out months, every single quarter. So we're also seeing the results of their buys after the fact. We don't exactly know when they started the position, but we do know the average cost of how many shares they bought, the average cost of what they bought too and stuff. Did you pull it up?
The 8K? No, that sounds off. Why, man? We usually talk about this all the time, man.
Okay, I'm gonna go to Data Roma. This is gonna bug me. I don't know if we can move on until we have
Till
this.
this is settled.
Um, Goodness gracious. I don't know. I thought pulling one up I'd be able to see it, but
My man, the 13F.
13F. Yeah.
Man, I'm putting in
Gosh.
everything because you said 8K.
Well, I knew it
And
was
I'm like,
so.
wait, is it that? And then Google was like, there is an 8F,
Yeah.
and I'm like looking and I'm like, that doesn't sound right. Like that, no.
There's so many you got the 10K, the 10Q, you do have the 8K,
Yeah.
then you got the 13F. That's the
Man,
magic combo we were
at
looking
least
for.
I got an excuse. I'm jet lagged as heck, and I'm like listening to you. You're like, man, there's
Yeah, I
this
know.
8K.
It's just up here, dude. It's just a monkey with symbols. There's not much. There's not many gears turning up there. What
It
I was
goes to
saying
show,
though.
man, you can be entrenched in all of this information and still still just have a brain fart, you know?
I will say my life, I've gotten on just fine not remembering the 13F. So I've made it this far.
You're rocking it, man. Sips
Um,
drink.
so on a similar note, as you and you Berkshire and UNH, I also had a similar experience recently where I felt a bit vindicated with Zoetis. Terry Smith, who is the founder of Fundsmith. He's been called like I'm sure a lot of you guys know him. He's been called like the British Warren Buffett. A lot of similarities in their investing style. His whole motto, his whole shtick is in his whole investing process is buy good companies, don't overpay, and then do nothing. Like he just tries to make it as simple and straightforward
Sounds
as
like
possible.
Buffett.
But yeah, I mean, I think he just learned, as everyone does, learned a lot from him. But he also wrote, let me get it real quick. He also wrote this book right here. For those of you watching, you'll see it. For those of you listening to the podcast, this book is Investing for Growth. And it's basically a compilation or an anthology of all his investment writings from 2010 to 2020. Highly recommend this book. Great investing book.
What's your one takeaway from that book?
Well, it's just buy good companies, don't overpay, do nothing. Don't overcomplicate it. Like don't make investing more complicated than it has to be. And one of his big things too is looking at the return on invested capital, or actually he uses return on capital employed. But him and also Pulak Prasad, who I think is also kind of similar. I think they also have similar styles. That's their thing. It's like if you want to look at one metric to try and gauge a quality company, look at their returns on capital. Look at how they're reinvesting the capital back into the business and how effective they are at doing so. That's going to tell you a lot about how the business can grow. And also, ultimately, at the end of the day, capital allocation decisions are made by the management team. So if you're seeing high returns on capital, it could be a sign of a high quality management team too. So that one metric can really tell you a lot. Go ahead. I think you're going to jump in there.
I got an interesting question for you, man. You and I obviously enjoy looking up stocks and doing our research and understanding to the best that we can a quality company from perhaps a not so quality company. Why is it that so many investors jump into these stocks? Like what I'm trying to get at is like we all know that not every company out there is a quality investment. So from an objective standpoint, if we're looking on like return on capital, or whatever it might be, how is one investor finding a company to be of high quality and worth an investment versus guys like me and you who'd be like, nah, that's not quality?
That's a great question. And I think that this is going to be a good conversation. That's a great question. I think that it's important to keep in mind that not everyone is looking for high quality companies. Some people just want to buy cheap companies. I mean that some people, that's not necessarily their highest priority. Some people just want to buy cheap companies. They want to buy companies that look cheap based on certain metrics, kind of like Ben Graham style, deep value investors. They're not buying a stock necessarily because it's a high quality business. They're buying it because some of the quantitative valuation metrics make it look, priced lower, valued lower than its intrinsic value. And so that's how they'll make their money, is just by buying something below what they think it's worth. And it doesn't matter the quality of the business as long as you're buying it below its intrinsic value. So some people care about that. Some people care about, clearly some people care just about dividends, Some people look at just the dividend stats and decide all I care about is the cash flow. This one's paying 6% or 7%, so it seems good enough for me. And other people will buy stocks for other reasons as well. But I don't think that everyone, especially when first starting out, I don't think that everyone seeks out high quality companies. And it's funny. I'm also reading this book right here, The Compounder's Element by Lawrence Anderson. It's okay so far. But last night I read a quote in the book, and he said that a lot of people start out as value investors because we're all inspired by the Ben Grahams and the Warren Buffetts, and we hear about value investing, and so a lot of people start out with that type of approach. But he said ultimately most investors over time will evolve to being quote unquote value investors and just buying cheap stocks to then seeking out high quality businesses, because you understand over a long period of time those are the ones that are going to um, compound the most and generate the highest returns, because time is the friend of the high quality business. It's the enemy of the low quality business. So he said value investors typically always evolve into being quote unquote quality investors. You never see it happen the other way around. And I think there's a reason for that.
Man, as you're talking, I was trying to scroll to a Blossom post that I made, and the first comment that I got on it kind of dealt with exactly what we're talking about. I can't find it, but basically the first comment said, like, I had mentioned some stocks in there like Nvidia, Amazon, Meta, and someone said, wow, Ari, like all great high quality companies, but way too expensive. And I think this is something we were talking about the other week where, again, my first comment back, my reply was like, well, price is what you pay and value is what you get. And so, that approach to just go for the quote unquote cheaper companies, what do you feel? How do you feel about that? Like,
It
I can
works
understand their logic, but
like in this, I mean, you can make money just buying cheap stocks and waiting for them to get to their intrinsic value. Um, I don't know. It's tough to say because you really can make money doing all sorts of different investment strategies, many of which I wouldn't want to partake in myself. But like, yeah, you can make money doing it, I suppose. Um, as it pertains to like price and value and how quality plays a role in that. Ideally, you want to be buying high quality companies at a cheap price. It doesn't always work out that way. It rarely does because the things that are of the highest quality tend to be, valued the highest as well. Unless there's just a special circumstance where that's not the case. Um, but on the other hand, because ideally you are a long-term investor and you will be holding these assets for a long time, you know, because they are high quality businesses and hopefully will continue to be, if they continue to be, you should still make out okay because these businesses will continue to grow and they will get better over time. And so even though they might look expensive, they could be worth paying more for because they are better. You know what I'm saying? It's basically the difference between buying, I don't know. I don't want to give specifics, but like a nice car that's maybe a little bit more expensive that's going to last longer versus a cheaper car that is more budget friendly but may come with more issues than the more expensive car. There's a trade-off here. It's like basically you're paying less today, but you might end up paying more for it later on, as opposed to if you just bought the higher quality car that's going to have less issues in the first place. You pay more up front, but in the long run, you probably will spend less on it. And that's kind of true with stocks too. It's not so much that you'll end up paying more potentially if you end up losing money, but it's also paying more could also be the opportunity cost or the missed opportunity of not getting into what ultimately was a higher quality business. Does that all kind of make sense? It's
yeah,
kind of
for
all
sure.
over the place, but
Like, I don't know how I ever feel about when I read comments like that because the logic just doesn't stick for me. I'm like, why wouldn't you just buy quality? And if you can't afford the quality right now, make more money. Like just don't spend that money on other non-quality stocks. Like
yeah.
I'd just rather build up these high-quality positions that I really don't have to worry about
Hmm.
and have like a juggernaut of a portfolio versus being like, well, I'll just settle for this stock because it's cheaper. Like
Yeah.
I don't know. I feel like it gets a lot of investors.
Yeah, I think like and to your point earlier, not all there most businesses and most stocks out there probably are not high quality stocks. Like I'll never need to own AutoZone. There's it might get cheap someday, but that's just not interesting to me. I'm in it for the long haul. I for better for worse, I don't want to say I get attached, but I develop affinities for the companies that I choose to own. As we talked about last week, like when you're picking individual stocks, it's kind of an extension of yourself in a sense. And I won't go into that whole thing because we did talk about it quite a bit last week. But because of that, because it's got your name on it and it's your big decision, like you should try and make the best decisions you can. And I don't know. I think the best decisions for the long term, I should say. And I think that's harder to do when you how do I say this? I think I'm kind of getting to the point where I think looking for anything other than a high quality stock is not the right way to go about it. I just don't know why you'd want to own something that's not going to be better in the future than it is today. No matter what the price is or the value is. Like Walgreens is another example. I know people who are still buying Walgreens, people who are still buying MPW, Medical Properties Trust, people who are still buying Zim Shipping, Annaly Capital. These are all, these all, excuse my French, but these all kind of suck. If you look at the dividend stats on them, at least they're going down over time. So, but same principle. I don't know why you'd want to own something who's going to pay you less in terms of your cash flow return, who's going to pay you less in the future than they're paying you today. It just doesn't make sense to me. That's just
Do you
me,
think a lot of it boils down to like investors just not doing that research, or do you actually think a fair amount of investors are doing the research, but they choose, like, again, to just go for that like lower or cheaper company?
I don't know. That's a good question.
Because there's so much noise out there, man. Like, there's so much noise. Just go on Blossom and scroll, and everybody's really think about it. Everybody's the next Warren Buffett, according to them. Like according to their picks, and even us, even we're guilty of this. And I try not to say this a lot, like as in like I have the answers. These are the stocks that are going to explode. You get a lot of YouTubers that say that, right? Like these stocks are going to 10x. These are the stocks that are going to double in the next 5 years. First of
Yeah.
all, anytime I see headlines like that, I run away. Those are the scariest headlines or thumbnails or titles I can read because I'm like, no,
Dude,
like
it's become a problem. Like I know all of you guys out there have seen these YouTube videos where it's the title something like $5 in this stock will retire you or something like, have you seen those?
yeah, of
And
course.
it's just, from a creator standpoint, it's getting I think it's getting kind of ridiculous out there. A lot of stuff's getting kind of ridiculous, and it sucks. Sucks for us who try to be a bit more tame. Like the worst that I'll do is like 3 deeply discounted stocks. That's as like out there as it gets for me these days. But when there's these other crazy titles or these other crazy headlines, yeah, it gets hard to. And I'm not complaining. It's hard to compete with that stuff, and it definitely yeah, it's just hard to compete with that stuff. And it's just
Man,
crazy some of the
I
stuff.
had someone on Masters of the Market, a couple weeks, last week, and Michael is a great guy. Shared that at the beginning of his journey, he was watching a lot of YouTube videos, and I was like, oh wow, that's great. And at the same time, I was saying, oh wow, that's great. I was like, I wonder who he's watching and how reliable those creators are. Because at the end of the day, like, there's creators, and then there's analysts, and then but like even the analysts don't know to the full extent. Just because you're piercing over statements, financial statements, it doesn't mean that by a couple weeks later, the CEO can get caught on a kiss cam, at a
Yeah,
Coldplay concert, right? Like,
sure.
like things could happen.
We've all been
But
there.
Yeah, we've all been in the Kiss Cam, man, at a Coldplay concert. But it's just interesting to me, and I always get worried, man, for investors. By the way, my titles usually on those Sunday videos, the stocks to buy now, which I got to be honest with you, I'm kind of doing away with that series. And I'm just going to keep on with Masters of the Market because I love that series, man. I love that series. Like that is my favorite thing to do is just talk to another investor, but more importantly, let that investor share. And for me, really just to be the listener who's asking the questions. And it has taught me so much, but most importantly, I kind of look at like stocks to buy now, like, I don't know, to each their own, I don't know if
Yeah.
if I'm going to continue on that series.
You don't. Oh, I see what you're saying. Yeah, I understand that.
I also think, by the way, there's so many ETFs now. Everybody wants to talk about more so ETFs. I don't know if you've realized this for your analytics, but I thought it was interesting that like the analytics, at least that I'm seeing on my side, there's been a downtick in like stock videos, individual stocks to buy now. And
Yeah.
we're seeing an
Oh,
uptick in
well,
like ETF videos.
dude, that you're about to open up a can of worms because I mean, you know what ETFs people are talking about in those videws. So yeah,
Oh
you're
yeah.
totally right. It's
And
it's a it's
I have
another
a lot of them
epidemic.
come on Masters of the Market to talk about it.
Yeah. You're totally right though. I mean, that stuff is definitely in trend right now. And creators, bless their heart, a lot of them will play the game and kind of go where the views are. So, which I understand. On one hand, I understand it. On the other hand, it's like, on the other hand, it's also tough to see, especially when the creator putting that out there doesn't actually think they're good investments. I think that's kind of the it's hard for me to reconcile when you know that to be true. And at least in my case, like going back to the deeply discounted stocks videos that I put out, I might not buy every stock or own every stock that I talk about, but every pretty much every stock that I talk about is at least one that I'm interested in or one that's at least on my watch list. And I think by now, and I put out a spreadsheet that shows every stock that I've talked about, the price that it was when I showed it in the video compared to the today, so you can see the gain and loss from when I talked about it. Um, and if you go look at that spreadsheet, a lot of you guys already have it. You'll start to see a lot of the same stocks on there. It's like I've probably talked about Old Dominion 2 or 3 times this year. I've probably talked about Watsco a couple times, Zoetis for sure, the same thing. Um, and so I think that's a bit more kosher. I don't know. I don't. I
Well, that was my stocks to buy, now video on Sunday. Like I wouldn't put out a video which I was just naming random stocks if I didn't actually think they were quality, if I
yeah
wasn't interested in them. Like I don't know. I just feel like there needs to be fiduciary responsibility in some sense on YouTube. Like, not to say that you have to invest in everything that you're making a video about, but for goodness sake, it's like at least really believe in it and put your money where your mouth is when you talk about certain things.
yeah
I just think it's dangerous waters out there, for people.
yeah, dude. It's definitely getting to be.
And
And
by the way,
to your
even when I ask investors who are investing in a lot of these income producing funds, like, do you think this is a trend or do you think this is the future? That's one of the most interesting questions that I get to ask them. And a
yeah
lot of them are like, yeah, it's definitely a trend right now. And I'm like, so why do you want to fall trap to the trend?
yeah. What's the answer to that? Or do you even get that far and you kind of just
Sometimes I
let it
do.
yeah
Look, it's interesting because like when I do Masters of the Market, I just try to be as objective as I can, and I realize like first of all, I'm learning from everybody. Okay, even if I think their strategy is foolish, they still are teaching me things. And so again, it's like keep my mouth shut and just listen and try to find out how they're right and how I could be wrong. But sometimes, like I just, man, I hear like, especially the younger kids getting on. They're like income, and I'm like, yeah, but why do you need it right now? Like, there's no real good answer other than like they just want income.
Yeah, and I think that more so speaks to just the trend aspect of it, because it's very prominent. You can't open up any social media platform these days without seeing those funds. But it's not even just those funds. I've been doing these portfolio reviews, these Blossom portfolio reviews, which has been awesome. But one thing that I'm noticing, couple things that I'm noticing, one of which I know I've already said this before, so sorry for repeating myself. But one thing I'm noticing is there's a lot of young people getting into investing, which I think is so awesome. So keep that up, all of you young guys out there. Great decision. But another thing that I'm starting to notice is that a lot of these portfolios look the same, and if it's not the income funds, it's Palantir, Robinhood, Hims and Hers, Oscar Health, Rocket Lab, Nvidia, Alphabet, Microsoft. And don't get me wrong, like those are not all bad companies. What I'm trying to get to is it all just looks to be the same. And I think that also speaks to just the trend aspect of all of this. There's something about, I mean, this just goes back to like human psychology and evolution too. Like it's safer to be in the herd. It's safer to be with a group of people. From a survival standpoint, back in the day, your chances of survival were a lot higher in a group versus if you were just by yourself out there in the jungle, just you and the lions and the tigers and the bears. And so that's where it all stems from, and that definitely reveals itself in our portfolios as well. And I think that's why you see a lot of the same names, because people see all these other people owning these stocks. And by the way, this kind of goes back to the whole price and value thing too. People see so many others buying Nvidia or owning Nvidia, I should say, owning Nvidia, owning Palantir, owning, you name it, these things, just these prominent stocks. And without regard for price or valuation or anything, they just jump right into it themselves too. And that's where it goes back to price, value, quality. Yes, you should pay up for quality businesses. Yes, a lot of these are, no doubt Nvidia's high quality company. But there's also no doubt that like it's run up just an insane amount. And so you got to think too, how much is being baked into the share price right now? Even though it's high quality, how much value am I really getting? How much value am I really getting at this price? I don't know. It's priced right now to where it's going to grow revenue 125% every year in perpetuity. And I'm obviously exaggerating, but the point that I'm trying to get to is a lot of new investors seeing all these other people owning these same stocks. They just decide that's what you do. It seems like that's just what you do. And I don't know any better. I just started investing, so I'm just going to do what this person over here, all these other people are doing too, because it's safer to just follow the herd. And I'm sorry, dude, I'll get off my soapbox in a second. I'm bad tonight. There's something in this Dr.
Man.
Pepper.
You're on it.
There's something in this Dr. Pepper, but what was I going to say? Oh, and bless their heart too, because you just don't know any better.
You gotta love when you start with that.
Well, dude,
Bless
I
their heart, man.
gotta give them the benefit of the doubt, because they're making a great.
The South, when someone says bless your heart, what that really means.
Is it not
the
good?
South, yeah, it's not good. In the South, if you go to the South and they say like, oh, bless your heart, it's their way of saying like, kindly F off.
Oh, well, I definitely don't mean it that way. I more so mean it to like give the benefit of the doubt, and I don't know. I guess, yeah, bless their heart in the sense that they are trying. They're trying to do the right thing, and they're trying to be responsible and start setting aside money for their future. But without knowing any better, they might just be buying into a stock that might end up hurting them, because it's even though it seems like a high quality thing and everyone else is doing it, it may be so high that it only has one direction to go, and we'll see what happens. I mean, we'll see. I mean, like I was saying at the start of this conversation, it seems like things have been really good lately, so it wouldn't surprise me to see a pullback. But then getting into some of this macro stuff, there's a lot of talk about interest rates being cut. And some of that might be being priced in right now, and maybe that's why we're seeing some gains. But if that actually does happen, then it's like this thing's just going to keep on going. It's rocket fuel.
Well, that's why again, I learned this lesson. What was it in 2021, maybe in 2022? I forgot what it was. But I had like a lump sum of like over $20,000 just sitting on the sidelines waiting for the moment to deploy it all. And I ended up going the whole year without deploying any of it, really. And so then I looked at the S&P and it went up by 22%. And I'm like, wow. So I just sat on this mound of cash waiting for an opportunity, and the opportunity passed me by.
Yeah. Okay.
So I don't know. It's hard sometimes because I'm like, okay, pullback, could it happen? It could, but then what if it doesn't? And then you're stuck in that position where like you could have invested everything. So now where I'm at, which a couple people, more than a couple people, have heard me say it, but when I say like cash is trash, I don't want to sit in cash anymore, man. I don't really care. Like true dollar cost averaging is you don't care if you're buying at the top, if you're buying at the bottom, or somewhere in the middle. You just don't want it in your pocket. And that's how I feel these days. I don't want it in my pocket. I'm just going to keep buying and not worry about it. Like my system personally is every Friday at the end of the week, if I haven't spent X amount, to just let it rip and spend it. But yeah, man, I don't want money sitting around, and unless it's emergency savings. That's what can sit around. Everything else must be deployed. And if I can't find a stock by the end of the week to deploy that in, right into the S&P, right into my tech fund, and then I just let it roll.
Yeah, that makes sense. And on that note, what most of us are working with like small portfolios, and I mean small in the sense that we're not working with like billions and billions of dollars where it's hard to deploy capital. So with that in mind, it's like an open playing field, and if you have cash and you don't know what to do with it,
send it over to us.
Send it over to us, exactly. There's a chance that maybe you're not looking hard enough at all the different opportunities out there. Because there's
sounds boring,
yeah,
send it over to us. No,
yeah,
if
we'll take it off your
sounds
hands.
boring, then I have to say like S&P 500.
Yeah, exactly.
Just don't. I don't know. Just don't sit on a lot of cash. I hate to say like don't sit on cash because we could get that pullback and maybe it's good, but I don't know. It's such a balancing act. I'm like, I am sitting on a few $1,000s right now, but that's way better than 20,000.
Right. Well, and you've been, I mean, since we started doing this podcast, I mean, even just the last few months, you've really put that cash to work quick. You didn't let it sit around very long.
Man, I build it up and then I just deploy, and I try my best to dollar cost average it, not just to lump sum it, all of it at one point. Like I'll give you a good example. This week, as tech has been faltering because of the recent tweets and remarks by Sam Altman, I've been buying up that tech ETF, and I realized today, like what I bought yesterday, it's already 10 below what it was. So I bought more today, and it could go down even more, and I'll buy even more. But I don't know, just like you said, I think there's the upward trend that's happening, and we know that happens over time anyways, like 5 to 10 to 20 years. So it's all good for me no matter when I buy, as long as it's a broad market ETF or an ETF. Individual stocks, I'm press the brakes with, but I don't want to miss out on the opportunity of that 22% end of year gain. because I was trying to be smart.
Yeah, and that's a great point that you bring up too. I think Charlie Munger said when it comes to being successful with investing, you don't have to be smart. Okay, a lot of people do all these fancy things to try and look smart. Double leverage ETF, naked put.
Inverse
So
ETF.
yeah, exactly. So many crazy things. It is being successful in investing is not necessarily about being super smart. It's just about not being dumb, not making dumb decisions. And that's why I like, especially as I've kind of gotten further down this road, that's why I like listening to guys like Terry Smith or Palak Prasad or even honestly Buffett and Munger. Um, they just don't make it more and Peter Lynch, especially Peter Lynch. Don't make it
I
more
love Peter
don't,
Lynch, man.
yeah, don't make it more complicated than it has to be. It doesn't you don't get extra points for being smart. You don't get style points. So,
You get risk points, really. It's like, how
yeah.
risky can you be trying to be smart, outsmart the market?
Yeah. Yeah. Well, anyway, man, did you have something else? Did I cut you
No, I
off?
was actually going to say, I think exactly what you were going to say, which is we're coming up
Yeah.
on the hour.
Yeah.
But I do want to say, this.
I have one closing thought too when you're done. Go ahead.
I was just going to say Albania 2.0 is coming up, and I hope that everybody is able to reach the point where you get to really enjoy while you can the fruits of your labor. And if you're not there yet, that's fine. Get to planting. But if you are there, wow, I can't begin to tell you how rejuvenating it's been. And I'm going to continue to do exactly what I'm doing, investing into these ETFs, you know, S&P 500, tech, and keep it simple. I'm loving this no stress path forward.
You look relaxed, man. Let me tell you.
So Albania will do it to someone, man. So
um,
the next no, not the next time we have this, because we got next week. I'll be in Philly, I think, by the next time we have this conversation. But the week after that, man, I'll be in Albania. No, I'm
nice.
sorry,
In
Greece.
Mykonos.
I'll be in Greece. Yeah.
That'll be fun. It'll be fun to see the view there. But I was just going to say, man, my last closing thought for everyone listening, especially all you young guys out there, keep up the good work. I love nothing more than to see just anyone start investing. I think it's so cool that it seems like it's starting to become a cool thing to do, not some stuffy, lame thing to do for people who are in their teens and 20s. Yeah, let's keep that trend going for sure. And I know we kind of talked about, some portfolio allocation stuff and the stuff I was saying earlier. I truly believe even if people are buying stuff like Nvidia right now, it pretty extensive highs, or these other high quality companies. Microsoft's not the cheapest either. Costco's not the cheapest either. We can keep going with that, but I truly believe too that over a long period of time, especially you young guys who have 20, 25, 30 plus years, maybe even 40 years left ahead of you before you even touch these investments, you'll be fine. You'll still be fine. So I say all of that stuff and share these opinions, trying to balance those two sides. Maybe not the best value, but over a long period of time, you'll make out okay. And even if you lose some money, you'll learn something important from that. So you'll be just fine either way. So I wanted to add that asterisk, because there is just so much gray area with this stuff, and I'd be remiss if I didn't include that.
Well, hopefully we've said something of value, and I'd love to know, because I don't
I
know how
doubt
you
it.
feel. I don't know how you feel about tonight's conversation. I feel it was all over the map, but I'm
This was
always
fun, man.
curious to see what people pull from this. So investors, go ahead, comment below what you personally pulled from today's episode, and how you are feeling about the state of the market, what you're seeing in your portfolios. I mean, just give us anything and everything in between down there in the comments. As always, find Ryan's portfolio on Blossom, totally transparently shared, as well as mine. Find us on Blossom if you're not already on Blossom. Links are down there in the description and pinned comment. And until the next go round here of the deep end, Ryan and I will catch you in the next one.